All right, ladies and gentlemen, welcome back once again. And this is lesson 7, I believe. Yeah, this is lesson 7 of our basic beginner forex trading course. And in this lesson, I'm going to talk about how to read a forex chart. Okay. So before we go any further, if you haven't watched my previous videos or the previous lessons, okay, you should go ahead and watch those lessons first, because the terms or the terminologies I'm going to be talking about in this video, okay, if they sound new to you, okay, then you need to go back to those the previous videos for you to be able to understand what I'm going to be talking about. Okay. All right, so let me get rid of this just to make some space. So what you see right here is a chart. Okay, first of all, this platform right here, or this website right here, is called TradingView. Okay, so TradingView is one of the most popular charting platforms out there. Okay, there's some other trading or chart platforms out there, but TradingView by far is the most popular, and it's the one that I'm going to be using to explain what I want to explain. Okay. All right. So right now, what you're looking at right now is the Euro USD chart. Okay. All right. So I want you to first pay attention to the extreme right here. You see this extreme right side? Okay. These values right here represent the price. Okay. All right. So let me drop down to now. I want to drop down to a lower time frame. Okay, that's not so necessary for this video, but what you're looking at right now, this is the 4-hour chart. Okay, it says 4H right there. You see, this means 4 hours. Okay, so that means each candle here took 4 hours to form. Okay, but let me drop down to the 15-minute because I want to explain something first. Okay, so you just click right there and then it will change your chart to a 15-minute chart. Okay. All right, so what I want to explain is these three lines right here. Okay, you see these three lines that keep changing? Okay, these ones right here, there are three lines. Okay, there's a line in the middle, there's a line on the top, and then there's a line at the bottom. Okay, so the line in the middle, okay, represents the current price. Okay, so this represents the current price of the Euro USD as I'm recording this video, the line in the middle. Okay, then the line below, okay, you see it says bid. Okay, and what did we say when we talked about the bid? We said the bid is the price you sell at. Okay, then the line on the top is the ask price. Okay, and what did we say the ask price is? Ask price is the price you buy at. Okay, so if you're finding trouble understanding what I've just said, like I said, go back to my previous videos. I explain everything. Okay. All right, so let me go back to the 4-hour chart. Let me go back to the 4-hour chart because I'm done explaining that. All right, so now there are different ways you can place a trade. Okay, but the way that I want to show you in this video will help me explain some of the things that I've covered previously. Okay, and how am I going to do that? Okay, just right click anywhere on the chart. Okay, and then go to add order. Okay, because I want to add an order ticket. Okay. All right, so if I click that, it will pull up this order ticket. Okay, now I'm going to explain most of the things contained on this order ticket. Okay. All right, so as I said in the beginning, okay, we are dealing with the Euro USD. Okay, the Euro against the United States dollar. Okay, so next we have sell on the left hand side, then we have buy on the right hand side. Okay, so let me talk about the sell first. Okay, so as you can see right there, if I wanted to sell this pair right here, okay, if I wanted to sell this currency pair right now, okay, and I want you to note that you see it keeps changing, okay, because this is a live market, okay. As you can see right here on the right hand side, these prices keep changing, okay, the ask, the current price, and the bid price, okay. That's the reason why it also keeps changing right here, okay. So if I wanted to sell this currency pair right now, okay, it would be sold to me at 1.11 or 1.1702. It just changed to 8. Okay. All right. So before I move on to the buy, okay, let me explain some one thing. One thing that you need to note as well, okay. So you see it says 1.1703, okay. And remember, we talked about the pip, okay. And what did we say the pip was? We said the pip is the fourth decimal place, okay. And this price right here has been stated up to 5 decimal places, okay. So we say anything smaller than the pip is called a pipet, okay. So this broker right here went ahead to list the price of the Euro USD up to the pipet, okay. So let me say that again. So if I wanted to sell, okay, I will sell this price at 1.1702. So 2 right now would be the pip, and or just changed, okay. So 2 right now would be the pip, and 5 would be the pipet. Now it's 6, okay. You get the point? I hope you get that, okay. So the fourth decimal place is the pip, and the fifth decimal place is the pipet, okay. It keeps changing, okay. All right. So, and like we said, okay, the price you sell at, okay, would be the bid price, okay. So now this right here is the bid price, okay. So let's move to the buy, okay. So if I move to the buy, okay, it is listed as 1.1702. So 2, now it has changed to 1, would be the pip. Then now 8 would be the pipet, okay. It keeps changing, okay. And like I said, the price you buy at is the ask price, okay. Now what you see in the middle here is what we call the spread, okay. And what did we say the spread was? We said the spread was the difference between the ask price and the bid price, okay. And we say the spread is the way your broker makes money, okay, because they are providing a service, okay. They give you an entry to the market. So for you to be able to access the market, you have to go through the broker, and that's how they make the money, okay. All right. So let's move on. Let's move on to now the orders, okay. As you can see right here, next we have the market. And now these are the orders, okay. We talked about these in the previous lessons that we covered, okay. So if you're finding trouble understanding, once again, go back to the previous lessons that I did cover, okay. So now these are the orders, okay. As you can see, we have the market order, we have the limit order, we have the stop order, okay. So let me keep it at the market order. I'll come back to these orders later on, but let me explain more of the things that are covered on this order ticket, okay. All right, remember when we were talking about the lot size, okay, we covered something called the units, okay. And we said if it's 100,000 units, okay, that represents a standard lot, okay. And a standard lot is one lot size, okay. Remember that, okay. If it's 10,000 units, okay, that would be a mini lot, okay. And a mini lot is represented by 0.1 lot size, okay. Then we also covered 1,000 units, okay. And we said this is the micro this is the micro, okay, the micro lot size, okay. And we said it's represented by 0.01. All right. So let me say that again. If it's 1,000 units, okay, it's equivalent to a micro lot, okay, and it's also equal to 0.01 lot size, okay. All right, we also talked about the margin, okay, and we said the margin, we gave a formula to calculate the margin, and we said how do they calculate the margin? It's 100. The margin is equal to 100 divided by your leverage, okay. Remember, we also talked about leverage and margin, okay. Remember that. So margin is calculated in percentages, okay. Let's say your broker gave you a leverage of 1 to 20, okay. So it will be your margin then will be 100 divided by 20, which will give you 5. So your margin will be 5%, okay. All right, so let me go now to the exits now, okay. So the exits, we have the take profit and the stop loss, okay. All right, we talked about the stop loss when we're talking about the types of orders. Remember that. All right, so the take profit, all right, will exit you out of the market if the market goes in your direction. Remember that. So the take profit will exit you. So the take profit and the stop loss are similar, okay. The only difference is the take profit will exit you out of the market if it goes in your direction, okay. And as you can see right there, you can state the price you want your take profit at, okay. You can either put your price or the pips, okay. Then the stop loss, like I said, is similar to the take profit. The only difference is it will exit you out of the market if the price goes against you, okay. Remember that. All right, so now let me go back to the orders now. Okay, so starting off with the market order. All right, we say the market order is the order you will place if you want to enter market at the current price, okay. So if I wanted to sell this price right now, as I'm looking at the charts, okay, let's say I look at the charts and I want to sell this market right now, okay. All right, I'll just click on sell on the left hand side, and then click on the bottom button that says sell right there, okay. I'm selling it at 1,000 units, which is the micro lot size, okay, which is equivalent to 0.00, it's equivalent to 0.01, okay, lot size, okay. All right, so if I click on sell right now, okay, my order will be placed. You see that? All right, so remember, this is a market order, okay. A market order, but now in this case it's a sell because I clicked on sell, okay. I wanted to enter the market at the current price, okay. As you can see right there, we have the 1,000 units, okay, or 0.01 lot size, or the micro lot, okay. All right, now what I want you to pay attention is this the red numbers you keep changing, that keep changing right here, okay. You see this says negative 0.18, this is the currency, it's in USD, okay. Now this is because of the spread, okay. Like I said, okay, you will always, regardless of whether you buy or sell, okay, you will always begin your trade in a negative, okay. Your trade will be in a loss, okay. This money will be deducted by your broker, okay, because like I said, the spread is how your brokers make money. So this money right here, okay, for you to be able to profit, okay, you have to, regardless of whether you buy or sell, okay, you will always begin your trade with a negative or a loss. This is the money you have to pay, guys, okay. That's how the industry is designed, okay. You can't go around this, okay, so don't worry about that. All right, so you see right here where it says TP, okay. TP is short for take profit, and SL short for stop loss. Okay, so since I wanted to sell this pair right here, I clicked on sell, remember? All right, so my stop loss will be above, okay, because I anticipate the market to keep going down. And how do I do that? I just clicked on it and dragged it. Okay, the same thing with the take profit. Okay, I'll just click on where it says TP, okay, and then just drag it. Okay, because I clicked on sell, I expect the market to go down. Okay, all right, so let me just adjust it a little bit, and then confirm this. Okay, I just click on confirm, so my order will be placed. Okay, now let me explain something here real quick. Okay, so that's the reason why I kept this text on the chart. Okay, just to bring out a clear picture. Okay, so this will be my stop loss, and then this will be my take profit. Okay, all right, so now remember, okay, I placed a sell trade. Okay, so if the trade, okay, keeps going up, okay, and it hits this orange line, which is my stop loss line, okay, I will exit the market automatically with a loss. Okay, if the market keeps going down, okay, and it hits my take profit line, the green line right here, okay, still I will exit the market with a profit. Okay, and this will be done automatically. Okay, all right, so let me clear it and then give you a buy example. All right, so let me delete all this. So if you want to delete your order, you just click on the X right there. It says close position. Okay, so I'll just close it. All right, now let me pull up the order ticket once again. So that was a sell example. So if I wanted to buy, so I'll click on add order, then I'll click on buy. Okay, you see it changes to buy right here. Okay, and then I go ahead and click buy. Okay, all right, so since I'm buying, okay, this remains the same. As you can see right there, I will still start my trade in a negative. Okay, this is because of the spread. Okay, regardless of whether you buy or sell, your broker will deduct that spread from your account. Okay, that's how they make money. All right, so now since I'm buying, let's say I put my stop loss right here. Okay, and then my TP up here. Okay, so I'll change this will be now, because this is a buy example, my TP will be up there, then my stop loss will be down here. Okay, and then confirm this trade. Okay, now if the market keeps going up and hits this green line right here, the take profit line, I will exit automatically out of the market with a profit. If it keeps going down, same thing but different. Okay, I will exit the market, okay, with a loss, and it will be done automatically. So these are just your exit orders. Okay, all right, so let's move on now to the next market, to the next order. Right, all right, so let me delete that and then close this as well. All right, and then pull this text a little bit away from the chart. Okay, all right, so let me pull up the order once again and then go to the next order type. Okay, all right, so we've looked at the market order, and we say the market order is the order you will place if you want to enter market at the current price. Okay, now let's go to the limit order. All right, so what did we say when we talked about the limit order? We said limit order is an order you place if you think price will retrace back before continuing in its direction. Okay, all right, so for the buy, let's begin with the buy example. Right, so I'll just click on the limit right there, select buy. Okay, and then click buy. All right, so my buy limit will be placed on the chart. Okay, so now I'll go ahead and do the adjustments. Okay, so since I expect the price to buy, okay, my stop loss will be below, just here, and then my TP will be above here. All right, so let me adjust the text as well and then explain. All right, so let me click on confirm. All right, so now what this means is, okay, if price, okay, pulls back, okay, as you can see, price is right here, okay. If it pulls back and hits this blue line, my buy limit line or my buy limit order, okay, I will be my order will be automatically triggered, okay. So it will be automatically executed, okay. I won't be on the charts, this will be automatic, okay. So this when it's triggered, all right, if it keeps going down, all right, and hits this orange line, I will exit the market with a loss, and this will also be done automatically, okay. If the price hits my buy limit order, all right, because like I say, the buy limit order, we expect price to retrace first before moving in its direction. So if it comes back from this point right here, you see the price is at this point right here, okay. If it retraces back, then hits my buy limit order line, okay, the order will be executed automatically. If price keeps going up, okay, until it hits my take profit line, all right, I will exit this trade with a profit. Again, it will be done automatically, all right. All right, so the easiest way to understand this, you use the buy limit, okay. If it's a buy limit, okay, your order will be placed below the current price, okay, because price is right here, okay. And as you can see, if it's a buy limit in this case, okay, your order will be placed below the current market price, okay. All right, so let's do the sell limit now, okay. Let me cancel this, all right. And for the sell limit, let me use another chart, because I want a market that it's a market that is selling, okay. And as you can see right there, this is the USD JPY pair, okay. This is the USD JPY chart, okay. If I wanted to place a sell limit on this chart right here, just right click once again, pull up my order ticket, okay, then head to limit, okay, then head to sell, okay, then go and click the sell button, all right. So my sell limit will be placed, okay. So what do I expect the market to sell, so my take profit will be, let's say, below here, all right. Then my stop loss will be maybe above here, all right. And then let me click on confirm this, all right. Then let me adjust the text on the screen, all right. I put my text up there, the stop loss will be up there on that orange line, then my take profit will be below here, all right. So now let me explain. So if the price, okay, let me drag this a little bit, let me get it out of the way. If the price, okay, comes back from here, because this is where the price is, this is what price is currently at, okay. If the price comes from here and then hits my sell limit order, all right, it will be executed automatically. So I will enter that, enter that trade automatically. If it keeps going up, okay, and hits my stop loss line, I will exit that trade with a loss, okay. If price is right here, okay, then pulls back and then hits my my sell limit order line, okay, then continues down, okay, and then hits my take profit line, okay, I will exit that trade, okay, I will exit that trade with a profit, all right, and it will be done automatically, okay. So to put it simply, okay, the sell limit will be the order above the current price, okay. Okay, that's the difference, okay. We say the buy limit, okay, will be because if the market is going up, okay, you place your buy limit below, so the buy limit will be the order below current price, and the sell limit will be the order above current price, okay. That's the difference, okay. That's the easiest way you can understand it, okay. All right, so let me clear this and then go to the next order, which is the stop order, okay. All right, so let me cancel this, and then go back to our Euro USD pair, okay. All right, so again, so I want to give you an example using the stop order, okay. So I'll right click once again, then pull up the order ticket, okay, and then select the stop order, all right. and we're going to start with the buy stop, okay, with the buy stop order. So just select the stop order right here and then select buy. What did we say the stop order was when we talked about this in our previous videos? Okay, I say the stop order is an order you will use if you think the market will continue with its current momentum. Okay, so let's say the market was buying. Okay, so you will expect that market to keep buying. Okay, if the market was selling, you expect the market to keep selling. Okay, or you preferably use this in cases where you think the market will break out. Okay, so let's look at the buy stop now. Okay, I just selected buy and click buy right here. Okay, so now what again? All right, let me just drag it a little bit below to create some room on the chart. All right, so since I'm buying my take profit, let's say I'll put my take profit up here. All right, and then put my stop loss. I will click and then just hold and drag it just below here. All right, then let me confirm this. Okay, so this will be my take profit, the green line, then the orange line will be my stop loss. Okay, again, so if the market, because the market is right here, okay, if the market rises and hits this blue line, which is the buy stop line, okay, I will my order will be triggered automatically. Okay, and if it keeps rising and going up and it hits this green line, which is the take profit line, okay, I will exit the trade with a profit. Okay, and it will be done automatically. All right, if the market rises from here, because this is where the market is, as you can see right here, okay, if it rises then hits my buy limit line, okay, the trade will be executed. Okay, and let's say it reverses and comes back and hits this orange line, which is my stop loss line. All right, or my stop loss order. Okay, I will exit the market automatically with a loss. All right, so that's that. So now let me so the buy stop order, if you want to just understand it easily, it will be an order placed above the current market price, because the market price is right here. Okay, so your buy stop order is above here. So the buy stop order is an order that will be placed above current market price. Okay, all right, so let me go to the sell stop now. Okay, so let me cancel this. Let me remove this off the chart. All right, so sell stop again, I'll go to the USD JPY pair. Okay, because it's selling. Okay, it will be the best example for me to demonstrate this. Okay, and again, so right click and then pull up my order ticket. All right, then go to the stop. Okay, the stop order right here, select the stop order, then go to sell. Okay, because I want to sell. All right, and as you can see, it's being put up here. Okay, and if you see this, there's that warning icon. Okay, it says, because there's no way you put your sell stop order above current market price. Okay, it should be down, as you can see right there. If I drag it down, okay, the error goes away. Okay, so you just need to take note of that. Okay, so I just dragged it in the background. Okay, all right, so after dragging it, I'll just click on sell. Okay, I'll sell stop order. All right, so since I'm selling, let's say my take profit will be below here. All right, and then my SL will be here. All right, let me confirm this and then explain. So my take profit will be below and my stop loss will be above here. Okay, so again, okay, this is where the price is. Oh, this is where the price is currently at. Okay, if the price moves, okay, keeps going down and then hits this sell stop order line, okay, my trade will be executed, okay, automatically for a sell. Okay, if it keeps going down and down and down and down and then it hits this green line, which is my take profit, okay, I will exit the trade with a profit. Okay, that's for the take profit. So if price is currently here and then comes and hits my sell stop line, all right, so the trade will be executed. Okay, if it reverses and goes all the way up and hits my stop loss line, okay, I will exit the trade with a loss. Okay, all right, so now again, your sell stop order, to put it easily, okay, for your sell stop order is an order you place below current market price. Okay, we say the buy stop is an order you place above current market price, so the sell stop order will be an order you place below current market price, because you expect market to continue with that sell momentum. Okay, you expect the market to keep going down. All right, so I think I've talked about everything I wanted to talk about. And if you found trouble understanding anything that I spoke about in this video, once again, please go back to my previous lessons. Okay, I talk about each and every term that I've mentioned in this video. Okay, I explain it. Okay, all right, so we've come to the end of this video, and I'll see you in another one. Bye.